again, we knew about fires. We know about wildfires, but what happened to LA was the most unique wildfire we've ever seen. I was there. I experienced it. You experienced it.
Yep.
And insurance said, wow, we never seen anything like that. The wind blew it, everything. And all of a sudden now the insurance companies are going back there and saying, we never seen this before. How do we prepare for it? How do we charge for it?
HOA Insights is brought to you by 5 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, HOA Invest, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Hi, I'm Robert Nordlund of Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services. And this is HOA Insights, where we promote common sense
for common areas. Well, welcome to episode number 107, where we're again speaking with insurance expert and regular co-host Kevin Davis to make sure you have all the right information at the right time to make the right decisions for the future of your association. Every week, we want your association to benefit from the stories, the insights, and the answers we're able to share here. And this helps you, our podcast audience, to be well-informed and to be well prepared for the challenging work you do leading your association. So today, we're going to try to hit the nail right on the head and talk about high insurance costs and what you can do about it at your association. We talk about a lot of different topics here on HOA Insights, but this may be one of the more consequential ones. So glad you joined us here today. Last week's episode number 106 featured a great interview with Florida attorney Rob Webb, who shared many insights from his years serving and guiding boards and some things residential boards can learn from his primary vacation ownership client base. Now, if you missed that episode or any other prior episode, take a moment after today's program to listen from our podcast website, hoainsights.org, or watch on our YouTube channel. But better yet, subscribe from any of the major podcast platforms so you don't miss any future episodes. And those of you watching on YouTube, I'll grab it here, can see the HOA Insights mug that I got from our merch store, which you can browse through from our hoainsights.org website or the link in the show notes. We have some great free stuff there. It's not all for sale stuff, but the free stuff is like the board member Zoom backgrounds. And we do have some specialty items for sale like the mug. So go to the merch store, download a free Zoom background for your next board meeting, and then take a moment, look around, find the mug you'd like. And if you're the 10th person to email me at podcast@reservestudy.com, mentioning episode 107 mug giveaway, and we'll ship that mug to you free of charge. Well, we enjoy hearing from you, responding to the issues that you're facing at your association. So if you have a hot topic, a crazy story, or a question you'd like us to address, you can always contact us at 805-203-3130 or email us at podcast@reservestudy.com. And today's episode comes from a question submitted by Jody from Chicago, who asked, with rising insurance rates, we've increased our dues in January, but we're thinking about doing it again before next year. Are other associations doing that? And again, it's great to have Kevin here to address that exact question. So, Kevin, welcome. What are we talking about here?
It's an excellent question, and there's 2 answers to it.
Okay.
It's the answer today in terms of what we see right now was all going to change in the next 3 months.
Okay.
So how are you going to tackle this answer? You want to talk about the future or talk about today?
Let's talk about today.
Today, if you have an insurance policy, one thing that's happened is that we've reached stability. Okay? Meaning stability, that means finally the insurance carriers are out there saying, you know what? We think we can see the light at the end of the tunnel. So instead of seeing 30, 40% rate increases, we expect to see around 10%. That means anywhere between 8 and 12%.
That means that the premiums have caught up to the losses. So insurance companies are finally like, okay, we're back in balance. Something like that?
Yes, exactly. And so what happens when that happens is that you get more capacity comes in because people are saying, guess what? Now there's money to be made in insurance. So guess what? We feel pretty good. That is as of since January and the first 3 months of the year. And it could be tomorrow and the next day, the next day, and the next day. Everything changes once that first quarter numbers get to the insurance carriers' And they're looking at it right now. Right now, every insurance provider is looking at their first 3 months and going, oh my God, oh my God, oh my God, oh my God.
Oh my God, good? Things are back to normal, or oh my God, things are awful?
Things are awful.
Oh, gee.
So right now, if you have to have an insurance policy, you may get lucky to be in that 8 to 12% range. So about average about 10%. But today, because the first quarter is over, January, February, March are over. And right now, it's April, and insurance carriers are looking at their first quarter results, and they are panicking right now. They are very extremely fearful of what they're seeing.
So we are recording this in April. I think this episode will drop in May or June, so things will even change. But Kevin, I got to tell you, things have been crazy this year. Usually it takes Congress some time to make changes, but we've had a lot of presidential tariffs here, tariffs there, that kind of stuff. So there's been a lot of instability. But the first few months of the year, actually, I think of insurance problems as being hurricane damage, things like that. And
yes. Yeah. What happened in January?
Oh, gee, wildfires. Oh, gee. Yeah. Okay. Right. Sorry. I'm embarrassed. We both live in Los Angeles metro area, and Kevin and I know people who lost their homes. All right. So the losses have gone up, and the insurance companies are back to being nervous.
Yes. What they're seeing is things that are traumatic. Okay. And again, what do we see? You mentioned two of them right off the bat. The tariffs. The tariffs have said what to us? You got all those fire damaged homes in Palisades where our friend lived, where David and Sandra lived at, right?
Right.
Now they have to rebuild. They get lumber. Where do you get the lumber from? From Canada.
It comes from Canada.
All the refrigerators, air conditioning, and get all the things they have. Guess where it's going to come from? From China, So guess what? The cost right now to rebuild Southern California is so astronomical that we can't even figure out what it is right now. So the cost to rebuild. So right now, the number one problem that we're facing that we didn't face before we talked 3 or 4 months ago, and right now every insurance is saying what's happening right now in terms of the tariff and in terms of rebuilding, repairing, replacing. All of that damage that was done, that caused by the fire, is now, we don't even know how much it's going to cost.
And it could change from week to week.
It could change from week to week. But we know right now it's not going to go, it's impacting everything. And we know there's tariffs going to be out there. And we know the ones from China that's where we're getting most of our things, our refrigerators, and all of our units, everything's coming out of there. But just the wood, all the wood is out of Canada, just to repair, everything that we need to as an insurance provider. When we have a fire, when everything happens, we got to replace property. Guess what? We don't build anything. We don't go out and get hammers. Everything gets imported. So the tariffs alone is going to create, and that's the number one area right now where every insurance provider, carrier is saying, oh my God, how are we going to deal with them? So right now, everybody's, you don't have enough insurance to pay for it.
You got me thinking about my house here. My wife and I were going to build a outdoor workbench, and she brought that point up. How much is this lumber going to cost? And for an outdoor workbench, I figured $100. And she said, well, figure it'd probably be 150 because of tariffs. Now, 100 to 150, no big deal. It's still an all-day Saturday project. But for a house, for air conditioners, for refrigerators, for roofing, you got me rubbing, wringing my hands here.
And one more thing about insurance, is that you have what's called like an inflation guard, where they allow you to go over. But we don't know how much that's going to even go over. If the tariffs stay at 150% or 100, whatever it's going to be, insurance right now is sitting in a room saying how much it's going to cost us to repair and replace property. And we don't know.
And you guys, this is what underwriters do for their living.
The one thing we do for a living is we predict how much it's going to cost to repair. And what we do, we charge you for it. We say it will cost you $1,000 a year because if your place burns down, you have any kind of damage, that repair, replacement costs X number of dollars. Now all of a sudden, guess what? We charge you $1,000, but guess what? It's going to cost us, 50% more than it did last year. So now all of a sudden, the rate going to have to increase just because of the tariffs. Just because of the tariffs alone, rate's going to increase.
You got me running out of words. But you're right. I think a lot of our listeners have been, I think it's accurate to say, blaming the insurance companies, thinking that they are taking a lot of money, that they're greedy, all that kind of stuff. But I am feeling sympathetic to the insurance companies because they are taking a beating.
Yes.
They're taking losses and they're trying to survive. And as a business owner, I know what my cost of materials in my business is employee salaries. But to be able to be in a business where you wonder what is your cost, and they could go up and down with a presidential signature 50%, that's scary.
They don't realize that how much we get impacted. So now all of a sudden, because of the tariffs, one area that one happened in just a couple of weeks ago has all the insurance executives sitting right now saying, what do we do? I mean, we thought we had a point in time where we had control over the things that caused us losses. Now all of a sudden, because of the tariffs, all of a sudden we have a bigger problem because we can't predict. We can't predict. Again, when this thing comes up in, May, let's say about 60, and whenever this presentation comes up, we will know a little bit more than we do right now. Right now, we don't know. We just don't know.
But I can see some executives sitting in rooms somewhere, conference rooms, saying, hey, Joe, hey, Susie, hey, Phyllis, hey, Fred, what's your best guess? And I can see them just raising their hands up and saying, we don't know. We just know that we're taking a beating because of all the losses and because of the higher costs. Okay, so we know that. We know the costs are uncertain and they're going up, perhaps scary up. We've been talking about property insurance. Let's focus this a little bit. Are we talking, I know you're a D&O insurance kind of guy, but you have your pulse on all of insurance. What are we talking about here?
Okay, good. I'm glad you said that because this is the question here. There's two issues right now. Property losses is the tariff. Liability losses is something that is something we have not seen, but we're seeing a lot of. Okay. Now, when we have a liability loss, and that's not okay if it's a director's office or you get in an auto accident or you have a slip and fall, no matter what it is, or you're sued by your people who live there because you're a board member. Now, all of a sudden, you go to a trial, and now there's a jury award to you. Now, historically, $1 million judgment is a lot of money. Okay, $1 million. What happened over the past 10 years, we had something called the nuclear verdict. These are anything over $10 million, the nuclear verdict. Okay. Today, we have something called thermonuclear verdict.
You're inventing new words.
And new words. That's anything over $100 million. And guess what? That's anything from $100 million, but we're actually seeing a handful of billion-dollar claims, awards, and judgments. Okay? A handful of them in the past couple of years. That's on top of, so now we're talking about these executives sitting in a room now and saying, we got a problem here. We had this major fire in Southern California, which is $275 billion economic losses. That's the last, I looked it up before, we got on our costs. What the economic losses right now? $275 billion. That's not insurable loss. That's how much, if you total everything, the car, everything that's the total losses, this is businesses. So you're talking about $275 billion. Nothing's compared to that right now. So you're looking at $275 billion. You got to look at now to use a tariff-based system to repair and replace the things out there and rebuild. Okay. So from a property point of view, that's driving insurers crazy. Now you open up another door, which is having something called thermonuclear verdicts. It's a word I just heard of about 2 months ago. These are verdicts that insurance companies are worried about because we're seeing things over $100 million. And then we saw our first, over the past couple of years, we have a handful of billion-dollar losses. And one of them's Monsanto. You have the Johnson & Johnson, the baby powder thing.
Right.
Yeah. I mean, those are the ones that we know about. Not as insurance, I'm worried about billion-dollar losses, $100 million losses. What I'm worried about is a $10 million loss becoming normal, or a $20 million loss becoming normal, where historically a $1 million loss was a big loss. Your insurance was $1 million per loss per year. That's what that was the standard. forever. As long as I've been in insurance, $1 million loss, $1 million annual aggregate, that's what it was. And then your homeowner's policy, you had $100,000 or $200,000. We're talking about numbers that we can't even understand from insurance.
I started writing it down, and I take notes during our conversation here to try to stay on track, and I lost track of the zeros on the $275 billion. So I just wrote down B. I'll look that up later. That's just crazy. And it was 1,200 homes, 1,500 homes, something like that.
Yeah.
Here in Los Angeles. That was crazy. And we have an Olympics in a couple of years.
Couple of years in 2028. Yeah.
I'm glad I'm not mayor of Los Angeles.
It's so many things happening right now. From again, this is the past 3 months. Okay. Again, we knew about fires. We know about wildfires, but what happened to LA was the most unique wildfire we've ever seen. I was there. I experienced, you experienced it. And insurance said, wow, we never seen anything like that. The wind blew it, everything. And all of a sudden now insurance companies are going back there and saying, we never seen this before. How do we prepare for it? How do we charge for it?
The wind was right. The weather was right. A reservoir was empty because it was being repaired.
Yep.
Just a lot of individual circumstances that came together for something really bad. So we have verdicts are getting higher on the liability side. We have situations where we have homes in reasonable areas. Well, I guess they're next to open space, and so that makes them at risk for fire damage. But there are circumstances that can make them burn. We know what's happening. What does an association, is there any alternative to an association just stopping? And who was it in the the question here today? Jody from Chicago said rising insurance rates. Okay. In their board meeting, are they faced with the fact that they just need to look at each other in their conference room and say, folks, we need to go up again from $550 a month to, who guesses, $600, $650 to be able to pay for insurance? How do they deal with this?
That's the best thing right now. What my goal today is say, everybody who's listening, be aware. This happened in the past 3 months. 6 months ago, 4 months ago, we talked about this year, and we thought we had a stable year. Stable, very, very stable year. We thought that the rates were, and claims, and again, guess what? We had disasters last year. We had a lot of disasters last year. But we said, okay, we got it now. We can figure it out. We're okay. And we're talking about stability now. Now we're reaching uncertainty and instability, which create fear in insurance companies. So that means is that we don't know what we're going to see in another 3 months. By the summer, we don't know what it's going to look like. So my suggestion off the bat is you have to be prepared, board members. You have to be prepared. You have to say, you know what? We have to budget for the rate. Insurance rate's going to go up more. Okay? I would say right now, if you go for 15% rate, you'd probably be pretty safe until you get the message that, guess what? That's not enough. Okay? Yeah. Because the tariffs may come down, okay? They may end up only paying, you have $275 billion in that fire loss, but we don't know how much of that is insurable, okay? Because a lot of it, what you got is not uninsurable, okay? So we'll know more in another couple of months where I go, guess what? A lot of that wasn't insurable. The tariffs not that bad. So we're going back to what we felt before. And the liability can change. In other words, those big claims, what can happen, you can get a jury pool that comes in and go, no. And especially our society is changing where are we going to still award these big juries? Do we, what's going to happen? And things can change rapidly in 3 months where in June, everything will be okay. Because we know that, every day to day things change. But by June, all this can be over, and we can say, guess what? We survived the past 3 months, the second quarter, and the claims weren't that big as what we thought it would be. The tariffs wasn't that big, and guess what? There's been no more $1 billion awards or $100 million awards. They drop back. If that happens, guess what? Now we're talking about going back to a stable certainty market where we're looking at it, we're feeling like, okay, there's certainty in here, and we can go back to, maybe a 10% average around 10% based on where you live. However, it goes back to the one simple thing. You got to be aware and look and see. Right now, the insurance companies are not making money. They understand what they need to do, but it is challenging right now because of what they're seeing out there. It's different. It's really different than we've ever seen before.
Kevin, twice a week, the dry cleaners pick up from my house. And I just know that if, they use some kind of chemical in dry cleaning our shirts and then pressing our shirts, that kind of stuff. If their chemical costs go up, then my dry cleaning costs are going to go up. That's just the way it is.
Yeah.
And for you to say the insurance companies are taking losses now, that's just like the dry cleaners saying, hey, Mr. Nordlund, your shirt used to be, I don't even know what it is, fortunately. It used to be $10 a shirt. Now it's going to be 12 or 15. What am I going to say? I still need my shirts dry cleaned. So there are costs.
But there's one thing you can do. We talk about things you can do about it. And you're talking about, that's a really good example of your dry cleaner. You can make decisions and say, okay, now maybe I can go once a week instead of twice a week. Okay. Now, so the same thing on the insurance side. This is the time you need to sit down with your insurance person, your agent or broker, and say, look at this and see, where can I save money? What can I do to make this thing less expensive than it is right now? You have to take ownership of your insurance policy. That's the one thing you got to do.
I think we set the table here in the first half.
Okay.
Let's take a quick break to hear from one of our generous sponsors, after which we'll be back to hear more common sense for common areas, to hear about what you can do and what control you have at your association.
Hi, I'm Kevin Davis, the president of Kevin Davis Insurance Services. Our experienced team of underwriters will help you when you get that declination. We provide the voice of reason, someone who will stand by you. Our underwriters bring years of knowledge to our clients that can't be automated by technology or driven by price. As a proud Anwins company, we bring true value to your community association clients. We are your community association insurance experts.
And we're back. Okay, it was a pretty sobering first half of this program. I know costs are going up. It was scary to hear that there's so much uncertainty. But Kevin, I want to stand on firm ground. You talked about I can at least choose how many times I'm going to have my shirts dry cleaned. I can choose how often the pool service comes and services our pool per week, things like that. What control do the board members have over their insurance premiums?
I would say there's a 4-step process they have to take. Okay. Step number 1 is be aware of what's happening out there. Okay. Leave your eyes open and say, okay, I understand right now. Insurance, it's tough out there. It costs a lot of money to repair every place. It costs a lot of money to defend, and if there's a judgment. So I get it now. So now that we're aware. Second thing we need to do is get an insurance professional there and say, let's go through the insurance policy. Okay. What am I missing? What can I alleviate? And so you really can understand what you're buying out there.
Okay. So if you don't have a pool, you don't need drowning insurance. If you don't have waterfront, you don't need something to do with dock or rising sea levels or something like that. Is that what you're talking about?
Or what you could do something more so is say, I'm going to put a higher deductible on certain things. Okay. So you're looking at it. So all of a sudden you say, well, listen, we have a lot of water problems right now. But guess what? We have a system now in place which shows me if there's water leakage, if there's. So guess what? To save money, I want to go for a higher deductible on water damage claims. I want to look at what I have, what I'm insuring, because understand that there's insurance and there's maintenance. Because the first call I get normally is that my roof is leaking, put in a claim. Okay. And you go, wait a minute, why is your roof leaking? Is it because of an occurrence or because of wear and tear? And guess what happens?
Because it's a 20 or 25-year-old roof.
Exactly.
Dummy. It's
exactly.
bound to leak.
Yes.
Okay.
Exactly.
I said that actually sarcastically.
But it's true, though. That's true. And that's the
Okay.
problem. What happens is that if you don't understand what your insurance provides coverage for, and you call up your insurance person and put a claim in for something that's not a covered loss, then guess what? There's a check mark next to your name. Okay. Check marks. Okay. Understand the difference between what you have to maintain and what you have to insure. And that's when you're sitting down with your insurance professional and saying, okay, we want to make sure we're insured things that we should insure for. And that is an accident, something occurring that we're not prepared for, a non-maintenance issue. And sometimes what they do, the condo boards look at it as because we maintain it, we have to insure it for maintenance issues. And that's where the problem comes into play, because now you start seeing maintenance issues claims, and that's why your rates go up. Once you understand your insurance in terms of maintaining versus insurance, now all of a sudden it goes back to that awareness. Now I'm aware so that I'm not putting claims out there that should not be covered.
Now you're feeding into my narrative. I like seeing my clients taking good care of their property. A property well cared for, they're going to have, and I'm using round numbers, 20 years where their roof serves them well. They're going to have the ironwork fence around the pool be stable and sturdy, and so little Johnny is not going to be running and slip and fall and bang into the ironwork and hurt themselves because something is there and it's stable and it's not breaking and cracking. Or a balcony railing, things, or maybe a gate that's supposed to keep people in or keep people out. Staying on top of maintenance prevents higher costs of deferred maintenance and prevents people, boards, homeowners from calling their insurance agent when they really should have fixed it for $100 or $500.
Let me add one more part to it, is that now all of a sudden, because you haven't fixed it, somebody trips and falls or somebody drowns. And now we go to the liability side, where somebody is saying, okay, because that person drowned, I want $20, $30 million as opposed to historically, and maybe a $1 or $2 million drowning. So what you're going to do is say, well, guess what? We did our job. We maintained the property enough. So now we have a defensible position. And that's the key. If you maintain the property, okay, so not only are you looking at a lower insurance rate, but when you are sued because there's trip and fall or there's a drowning, you can say, wait a minute, we maintain our property as outlined in the governing documents or in our maintenance plan.
And the jury hearing that will say, well, gee, the board did everything they can, everything they could, everything they should have. And so the person's asking for $10 million. Obviously they drowned, but we'll give them $1 million, not the $10 million verdict.
Exactly. Or
Okay.
because you didn't do it the right way, now that $10 million goes to $100 million because now all of a sudden you did something so egregious, you knew the gate was not there, or was not fixed properly, didn't close properly. So now all of a sudden you're talking about a major loss right there.
Because
So
there's a record
we're
in the board
talking about
meeting.
two areas now. Yeah.
Yeah.
We're talking about the property in terms of maintaining the property so that, it looks nice and you maintain it because it's your job. But it's like it's hurt. It's different between being a couple of $1 million versus a lot of millions of dollars.
Yeah, you don't want a line item in the meeting notes saying that we didn't fix that gate because it was going to be $100.
Yeah.
You don't want to be cheap, and someone will say, for $100, my little boy drowned. It's a bad look. Okay, hey, help me stay on track here. You said you had four things.
Okay.
Number one was don't be surprised. Number two,
Don't be
get in
surprised.
it.
Sit
Talk
with
about
the insurance person and learn it, understand it, get to understanding. Third thing is budget. Budget for it. Okay. The one thing that a community association can do that we can't do, right? When something emergency happens to us, guess what we got to do? We have to go to the bank, get loans. Community association can budget and say, guess what? We know this is the cost of next year. We want to budget for it today. Get the money up front, and budget. So just really budget by talking to an insurance professional and saying, what do you think is going to happen? Okay, right now, we're not sure, but 10% is okay. But 3 months from now, call me again and we'll let you know a little bit more.
I'm going to say quarterly review. Is that fair?
Well, I would not say, because it depends on when your insurance policy comes up. You got to prepare. If your insurance policy comes up later on this year, I would say talk to your insurance, about 30 days, 90 days before it comes out. Sit down, because guess what? It's going to change. Right now, everything can change in 90 days. Things are a lot different. 90 days before your insurance comes up, sit down with your insurance professional and say, what do you think? What do I have?
Yeah.
How can I save money? I don't want to limit coverage, but certain coverage I can limit. Do you really need a massive umbrella policy? Some of the association has a $100 million umbrella policy. Do you need one? Well, I hate to say you don't need one, but if you're doing the job, you're maintaining it properly, maybe you can say, I don't need a really, really high limit on my umbrella policy. Maybe I need a $5 million because we are focusing on maintaining my association. That we don't have the kind of issues that the association across the street has.
That's a situation where spending money saves money.
Save
if you
money,
are running a tight ship there at your association, then all of a sudden some of these other costs go away or get reduced. I'm also thinking that just as those insurance executives were in those board meetings unsure about what was going to go on, and so they have to hedge up, Julie Adamen talks so much about communication and how you can't do it enough. Again, I'm not sure exactly when this episode will drop, but it will be May or June. And it may be early enough, or even wherever it falls in your budget year, it may be time to add a note in your communication with the homeowners that, hey, insurance continues to go up, expect an increase next year. Alert them, let them, don't drop it on them at the last minute, but start to prepare the soil. Is that fair?
That's number 4. You just named number 4. Communication was number 4.
Okay.
Once you get the information, once you become aware, you have to communicate to the people. You have to let them know what's going on and why. What we don't do enough of it is say why. What we do is say those insurance people are the bad guys. They're ripping us off. I can't believe they're doing it. Okay. You got to say, listen, this is what we heard. This is what we see. To repair, replace anything is more expensive than it ever has been before. Not because of tariffs, but inflation and everything. It's just everything costs more money today than it had before. That's the reason why rates are going up. Another reason why, because there's something out there, these verdicts that we see about all the time. Hey, the number of lawyers that are out there now since COVID. We looked at the numbers of people who went to college during COVID and got a law degree. And there's so many lawyers out there right now, and so many things happen on that law side that are really focusing in on those, what I call thermonuclear verdicts. Because guess what? If you have a $100 million verdict, guess what? You got a lot of happy lawyers there. Communication is the key. You have to let people know what's going on.
All right. So there are things you can do to get on the good side of the equation. Take good care of your place. Have clean records. Show that you're doing what you can. Communicate, all those kinds of things. And like you say, maybe things will settle down economically. Maybe the verdicts will settle down with people appreciating that, the association doing the right thing and the person at fault had some fraction of responsibility. What I'm hearing is there's no magic. It's almost like do the common sense things.
Exactly. And that's it. Because guess what? At the end of the day, you can't decide. You can't pick your building up and live in an area where there's no fires. If there's fires, there's fires, or earthquakes or floods or whatever it is. You can't do anything about that. If you have a 30-year-old building and the roof is old, you know what? You got a 30-year-old building and you can't do anything about that.
And the roof is old.
But the only thing you can do is maintain your association. That's it. If you maintain the association, it's the one area you have control over. You can't control anything else around there, but you can maintain it. And if you focus on maintaining your association, guess what's going to happen? Your insurance person, your insurance agent will look at your place and go, you know what? Let's try to get you a better deal. Because you're focused in on the things that are important, the things that are really matter. You can't control. Yes, you live in a fire zone. It's interesting. What happened is there's a fire zone in California, right? Well, guess what? That fire zone is spread. We need to wear a not fire zone now map because it is just spreading and spreading and spreading to the point where it's like, wow, this is a fire zone? Yeah, it's a fire zone. So California, it's going to be hard. It's going to be tough if you live in California, especially Southern California, because of that fire really is challenging. However, it may not branch out to other areas and it may not branch out into areas where there are no fires. So we don't know. We'll know, again, I guess we'll come back again in 3 months, Robert, and we'll do an update and say, guess this is where we're at right now. Yeah, I guess we're going to have to do that.
Yeah, well, we will.
We'll learn more in another 3 months.
Number one, you and I do this regularly. So we're going to be back, and we know the situation is going to change, and we'll provide you, our audience, with the latest information. So, Kevin, it's always great talking with you, this timely conversation. Any closing thoughts to add at this time?
Maintain. And awareness. You got to be aware. And when you got to explain why. Why are the rates going up? And you got to say the reason why, because to repair or replace has cost more money than ever before. Not only we talking about inflation, tariffs, all that stuff, that you got insurance executives right now or in conference calls saying, what do we do? And we don't know. We don't know right now.
You know, the way you've explained it here, I think your homeowners will understand that with the uncertainties, with the wildfires in Los Angeles, the tornadoes that will happen, the ice storms that will happen, everything is expensive, and taking good care of your place and communicating clearly to your homeowners, this is the cost of living in an association nowadays. It's going to be the same whether you're in our association or another association, or you have your own single family home somewhere. So it just is a rising cost out there. To our audience, we hope you learned some HOA insights from our discussion today that helps you bring common sense to your common areas. That communication tool, we hope you've given you some real talking points. So thank you for joining us today. We look forward to bringing many more episodes to you week after week after week. We will be here, and it'll be great to have you join us on a regular basis. Spread the word.
You've been listening to HOA Insights, common sense for common areas. If you like the show and want to support the work that we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comments section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed in this program are those of the hosts and guests, with the goal of providing general education about the community association industry. You'll want to consult licensed professionals before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.